All right. Good morning. It's Cowboy, and it is Thursday, 8:30 AM EST, and this is my longer day. I'm going to do this show, and then I go on to the Rogue show in from now. It's about 2.5 hours, if I'm not mistaken. Yeah, sounds right. The gorilla should be on shortly. Excuse me. The gorilla should be on shortly. He didn't tell me he wasn't coming on, so we should see him in a little bit. In the meantime, we just had some data come out, so I'm going to go ahead and share the screen and jump right into the data and charts. If you want to know more about what we do at Algo Factory, zap the QR code that you see in the top right-hand side of the corner, and we can talk about that later. All right. So we're looking at some dollar week stuff, which usually means that it pushes everything else up. And what I mean by that is if you look at the data that just came out, 8:30 AM EST, my time 6:30 AM, you can see that advanced GDP and unemployment claims came out, and GDP was lower than expected by a fair amount. Expectation was 2.5%, and the actual was 1.6%. So quite a bit lower than expected. What does that come out to? About 38% lower, something like that. And then you have unemployment claims, which is a little higher than normal, but not, I'm sorry, lower than normal. But not much lower than normal, right? So this is dollar strong data, but it appears that the GDP data is actually going to be, well, actually in the charts, the GDP data is overpowering that. Forgive me, I'm saying it backwards. The unemployment claims data is overpowering GDP because it does seem that the dollar is moving up on this news. So it looks like unemployment claims is a little bit more important. Let's go ahead and take a look at the charts. In terms of the dollar, well, we can even see it on Bitcoin. You can see here I'm in a short, and that's in a short since last night, and it is going well. This is a swing short, so this is something that's going to take quite a bit of time in my world to actually finish out. Usually I'm in and out of a trade in minutes or hours, but in this case, not the case. So let's go ahead and look at a lower time frame here. Look at the 5-minute chart so we can see how this economic data announcement is actually affecting the numbers. Give me just a moment. Okay, not getting a lot of cooperation here. There we go. So you can see here that, let's do this and we'll lock that. Okay. Might be a little hard to see because I'm in the middle of a long short box, but you can see how this candle here is pulling down pretty strongly. Right as soon as that news came out, Bitcoin is headed down, the dollar getting stronger. Of course, Bitcoin is high time frame short. It is ready to go down more or less. I shouldn't say it's high time frame short. It's kind of like mid time frame short. High time frame is always long. If you want to go like to the monthly, the monthly algos are always long on Bitcoin. Like I've never seen it other than long for very like 95% of the time. The weekly mostly is long. It flips back and forth, but the daily can go short for a fair amount of time. So, right now we are in a little bit of a short scenario, and that's why I'm in a short. Let's look at the euro. Now the euro is in like kind of it wants to be in a move upward on a higher time frame. This is the 5-minute candle, so you're seeing quite a reaction. And again, this is why I don't like to trade the news at all. Although I'm in my own euro short that's in a much higher time frame, you get these moves that really just will mess a trader up. You gotta be on top of these. This is look at this. Like the main reaction here so far has been to go short. However, if you look, it went long for a short time and then it moved down short. So people who were long, this is on a minute chart, right? So what you're seeing is a very close up thing. And that was the gorilla. He'll be on very soon, by the way. You're seeing a very close up, like a zoomed in look at this chart right now. So if I were to have like gone long, perhaps a long trade would have looked it would have had a much higher target than what you're seeing. Maybe something up here. And then of course, a stop loss maybe like down here based on this structure back here. Maybe, I'm just kind of sketching this out so you guys can see why trading news can be so much trouble, right? So people got excited, price went long, and then it just got knocked down into stop losses. And I can almost guarantee you that what's going on here is a stop run. For those who were long, they had their stops run. For those who were short, they immediately got their stops run, right? So if you wanted to go short and you had your stop too close, maybe based on this structure over here, for sure you got stop ran, right? Your stop loss would have been up here based on all this structure. It would have been above that structure, and price went up, grabbed all those stops, and then moved down. Now you got price stalling out, not really doing anything. And this really was certainly kind of a stop run. And that makes sense. We have mixed data. We have some data that supports a long thesis, unemployment numbers down. You have some, forgive me, that's the opposite. We have some numbers that support a long thesis. Yeah, unemployment numbers down. Some numbers support a short thesis with GDP, also being down when it should be up for that. So as it stands right now, though, it does appear that price will head down a bit. I don't know how far it'll go, though. This is a pretty considerable move, actually, considering how kind of not unimportant, but like the unemployment claims come out every week. It's not like it's a strong metric, but you know what? It is a what do you call it? It's a red envelope there. That usually means it's it's a strong piece of data for sure. So we'll see about it. We shall see. Let's go ahead and look at the comments. Buenos dias, says Jam Man. Tech Solution says, don't forget. Oh, yeah, I appreciate that. Likes, subscribes. We like all that stuff. Helps us out, helps the algos. If you like what you're watching, hit that like button. We got more data coming out at 8 a.m. We got the pending home sales, and that is a high impact event. So depending on how that goes, if pending home sales are less than expected, that is a dollar week look, and that means that the price of anything against the dollar should be going up. So yeah, if the economic data is bad, like unemployment is higher than it should be, advanced GDP is lower, pending home sales are lower than they should be, what that means in the scheme of trading is that the expectation is that they're going to go ahead and cut the rates, which means dollar week, which means, the lower the rates, the easier it is to finance investment. And then you see more money going into markets. It's pretty much how that works. So, all right, good. Well, I don't see any requests for charts. So I'm just going to go ahead and look at what Bitcoin is probably going to do. And let's go to a higher time frame. We'll just go to like a day trading time frame here. This is a 30-minute, and what it appears that it's going to do is it is against a bit of like a support. Not necessarily. I mean, there's some support here on the chart, but I'm talking about algorithmically. There's some forces pushing it up. So it seems like it's going to kind of want to stair step down, maybe even pop up and then eventually make its way down, right? If my short thesis is correct. Now, there's always the possibility that there's enough steam that gathers during this time, the bulls kick in and price goes up. But I actually used a lot of liquidity. Look, you can see my target is actually a little bit lower than these supports. I may readjust that, but this is where the liquidity was, right? That's why I chose that. And a lot of times on a move down, Bitcoin will stop run. So we'll see how this goes. I may move this stop up a hair just to ensure, or at least have a better probability of getting a target and not being front ran, because we are in a bull market. It's just in a bull market pullback, and a lot of your supports get front ran. That means that people will buy before they would normally buy. It's like, the price is headed down, but people are still really bullish, like, because we're in a bull market, so they'll buy early. So I might move my stop up just a bit. In fact, let's go ahead and take a look at the Kingfisher's liquidity to see if the liquidity map has changed in the last 12 hours since I've taken that trade, or however many hours it's been. Okay. Yeah, there's a fair amount of liquidity at 58.6, but in reality, most liquidity is to the upside around 66,000. But the charts at this point still favor a bit of a move down. I mean, the most likely place for it to go is 58.6, let's say 58.7 to be safe. Let's see where my target is on this. 59. Okay, so yeah, I mean, most liquidity is going to be down here below where my target is. So I might have to adjust. Like, I know that at some point, once the charts do something in particular, once the algos do something in particular, my stop will be put to the entry, right? So that means that no matter what happens, I'll be in a trade that pays for itself. I might even take off a certain amount of a certain amount of risk and take some profit at a certain point in this. But, the metrics do say that this is the short. It's just kind of an odd short because your low points are above, like the structure for the low points are above liquidity. So, like I say, I may play it safe and change this to be towards the bottom of the range because I don't know. I just don't like to be below ranges. Like a smart. Let me unlock this. Like a smart bottom would be like right here. It's still a 2.5 to 1. So let's be smart about this. New stop at about 61,050. New take profit. I'll change that inside the trade here. I know that it's going to be kind of a bummer if price goes down to the original targets, but it's just too far down below structure for me to be comfortable. So that trade has been modified. And then the even though my stop loss is like way up here, Bitcoin's a wily beast, and sometimes it will go up and grab that. So as soon as this lower support here is broken and the algos have some data that I like, I will move the stop as well. Good. Looks like we're at the end of the live lab, so I am going to go ahead and open up the private live lab over in Telegram. Via the Gorilla said he'll be on momentarily. I imagine he's talking to people around the world as he does. This is kind of a time when a lot of countries that he deals with are, finishing their workday, starting to, make all their calls at the end of the day to the West. So that might be what's going on with the Gorilla here. So he'll be on shortly. So I'm just kind of messing with the controls. Perfect. All right, good. Well, come on over, algofactory.tech. We help people build trading algorithms. Algorithms are merely just a way to trade. You don't have to know how to do computer coding or anything like that. We just show you how to develop your own trading method, and you can use that method to pull money out of the market. It could be as often as daily, weekly, monthly, whatever works for you, right? You got like a full-time job, you can just trade, to where you only are trading outside of the hours of your work. It's actually a pretty easy thing to set up. Under any circumstance, though, we know what we're doing, and we can help you develop your own method. It's a big deal, right? Because if you're using somebody else's method, you didn't develop that. If you develop your own method, then you're going to have the psychological confidence in that method to stick with it. And the biggest mistake the traders make is it's always going to be psychological to some degree. And the reason it's psychological is they have no foundation. They don't know what they're doing, number one. Number two, they didn't develop their own method. That's the big one. And number three, they don't manage their book. They don't treat their trading like a business. We show you all that stuff at algofactory.tech. So zap QR code, come see us. And don't forget,
join us or die.